In business tonight, chip stocks across Asia are falling victim to the escalating US-China tech war. The sell-off slashed more than $240 billion from the sector's global market value. And investors, they are spooked by the fresh curbs placed on China to block its access to American technology. Even though the curbs target China, many chip makers have plants there. And the rules create extra hurdles and require government sign-off. And these include TSMC, which is the world's biggest contract chip maker. Its stock ended the day sharply lower, more than 8% down. It is a similar picture for its peer UMC, closing lower by about 7%. Now, Taiwanese chip makers are among those most affected in the fallout. Meantime, chip makers in South Korea and Japan also taking a big hit, with Samsung's shares ending about 1% lower. Major Japanese chip makers, they also saw declines in excess of 5%, as many of them do significant business with China. For instance, the country accounts for about a quarter of Tokyo Electron's sales. China's biggest chip maker, SMIC, ending the day about 5% lower as well. And for more, Danni Hewson, financial analyst at AJ Bell, joins us. Now, Danny, how damaging are the latest curbs to Chinese chip makers? I mean, how significantly could they slow China's advanced chip manufacturing ambitions?
Well, look, China has been playing catch up in the chip making race. We know that semiconductors are the lifeblood of all advanced technology. We use them in everything from our smartphones to electric vehicles to, of course, military weaponry. And we know that these curbs are going to have a significant impact on China's plans to become a more dominant force in that area. Chip makers really rely on each other and on tools from other countries right across the world. It is a massive global supply chain, which is why it was damaged so much by the COVID crisis and why there's been such a huge issue with this announcement from the United States, that it's really put a spoke on the wheel of all of those plans, not only of Chinese companies, but also of foreign companies as well.
Yeah, of course, as you said, it's not going to be China, it's not China that's the only one that's going to be hurt. Already reports that U.S. chip toolmaker KLA Corp will cease offering some supplies and services to those China-based customers, and that includes South Korea's SK Hynix. So we are seeing the effects ripple through the industry.
Yeah, and at the moment, we just can't tell exactly how far those ripples are going to filter out. As you've said, it's not just selling chips to Chinese companies, it's about selling tools to make those chips. And it's not just about US companies as well, it's about foreign companies that either use US chips or US parts in order to make those chips. So the whole of that market really is integrated. And just think about all of those businesses, your car makers, your phone makers, your games makers. All of those companies have supply chains which are often just-in-time supply chains. So this is going to be causing a massive headache for an awful lot of companies, not just in China, but right around the world. There'll be an awful lot of discussions taking place in boardrooms right around the world at the moment of how exactly this is going to affect their plans going forward and how they can best mitigate the situation.
Danny, which other sectors or companies you think will suffer from these curbs?
We expect that any sector which relies upon semiconductors will suffer from these curbs. If you think about how badly the likes of car manufacturers, particularly electric vehicle manufacturers, games makers, TV makers, even medical companies that rely on semiconductors to create that cutting-edge life-saving equipment that we've spoken so much about during the COVID crisis. Right across the world, there will be businesses that either work alongside companies that use semiconductors which might be impacted or require some of the tools involved. It is a bit like a giant jigsaw puzzle, and one piece has been pulled out. And that means for a lot of companies, they're not going to be able to complete the picture.
Yeah, and the chip sector's outlook has already worsened this year with softening demand, and now this. So how significant of a blow are these latest measures, and how will the global market fare in the next few years?
Yeah, I mean, chip makers have taken something of a beating over the last few months because we've seen a cost of living crisis. Those rising prices have really sort of taken a dent out of consumer demand for some of their products. They were already really reeling from the situation following the COVID outbreak, which impacted supply chains. They were only just really getting back to a point where things were smoothing over. But we know that businesses, they are smart. They work very cleverly and very quickly to try and find a solution. And similar measures which were imposed on Russia earlier this year have already been dealt with by a lot of these businesses. It's another headache that they didn't want right now, but clearly it's one that they're going to have to deal with.
Many thanks for that, Danni Hewson, the financial analyst at AJ Bell.